Hi, 19th of January. This is the oil futures. I would like to talk about the oil today to illustrate a couple of points. Let's start with the good news. This is the morning. This is the London Open. We have a buy signal here. It's not triggered because we use the buffer until more or less here. At about 70. The market goes up to 79. That's quite unlucky because the first target that we have by default is 10 points. So we don't make 10 points and the market goes down. So the first trade is a little bit frustrating, and it's break even. The market then goes down and then goes up again. And here at this particular bar, you can see the signal is reset. You have another short signal. And because this is a rejection, a clear rejection of the pivot point, and really didn't even make it to this double top here, a short was quite okay. It wasn't that advanced because it's a new signal. The stop would have been up here, or if you want to be a little bit shorter, you can put it up here, but up here is quite enough, or even just a bit above the pivot point, because really what we want to see is a retest of this level here. That would be our first target. If you have about 10 points from the entry to here, it's a valid trade. You don't have to wait for the breakout here. You can actually enter much earlier. So that would have been the first target level. The second target level would have been this second low here, and the market reached it anyway. Consider that if you didn't do that and waited for this, you would have had your 10 points or even more anyway. So that was a pretty good morning. Let's have a look now at the afternoon. And the afternoon was a completely different story. The market really didn't do much. You had quite a sort of undecisive signals here. And in fact, nothing happens. We are trading on a range. There is no signal. Well, this basically was filtered for the pivot point. And when you see things like this, you always have to start wondering when the market is going to make a move. And you also need to have some alarm bells ringing, because today it's a big day for oil. It was the oil inventories at 4 o'clock, and the fact that the 2 o'clock bar, which is the one when NYMEX opened, which has been in these last days and weeks quite active in the opening, didn't really do anything. I mean, it retested the low and then it went up. And the picture starts being a little bit too complicated here. Let's have another look at the higher time frame, the M15 for instance. You see here we have a long-term trend line that has been respected a couple of times, and we are now here. It's been respected on this too, even if it has been slightly violated on this. We can call it a test and a rejection of the trend line. So the situation starts being a little bit more complicated further. Then you have here a high very close to the pivot. That was 69. The other high is 73 and the other high is 80. So here you have 430, sorry, 230. You have a break of this pivot. The trend line is broken. You have a break of this pivot. But you see, it's quite difficult to see where this market can go, because you have all sorts of lines here. That's you know, you have this one here. You have this one here. If you have taken this one, you would have lost. And this is the loss that I actually recorded in my journal. I didn't take this, but when you see that the market is so unsure, the best thing to do is to stay away. And this again, it's another example. Now here, if you entered on the top of this one, you might have got out with a break-even. And a break-even could have been achieved here anyway. But, you know, we were really closer and closer and closer to the 4 o'clock news for oil. So I guess the message is, if you don't see something that is plain and comes out quite clearly as a possible trade and a probable trade, most of the time it is not. I understand that quite a lot of people will be pushed to take this, because not a lot happened in the afternoon and everybody was quite keen to get in something, somehow. But this is usually a bad idea. So the lesson of the day is, if it doesn't come out very clearly as a very probable trade, just sit and wait. Capital preservation is the most important thing.